Like, what is really hindering people from being confident to place a trade when you truly understand that your potential in this market is limitless? Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I'm going to share with you all a Zoom call that I've recorded with the CYPRX students where we talked about psychology. We're going to discuss not having an ego in this market, how not having an ego in this market saved my portfolio this morning. I was able to determine that the market was moving against me. By creating an exit plan in this market and following that exit plan to the T, I was able to save my portfolio and close my trade a little bit early. We're also going to discuss proper trade management and not overexposing your capital by understanding proper risk management. If anybody is interested in the CYPRX mentorship, that link is in the description down below. Don't forget that you can email the customer support at cyprxtrading.com email and schedule a Zoom call with me before you do enroll in the CYPRX mentorship if you have any questions to ask. Without further ado, let's get started into today's video breakdown. Make sure that you all, before you hop off the YouTube channel, smash that thumbs up button and subscribe to the YouTube channel. We really do appreciate it. All right, cool. So I had a student, I was texting a student and they were just messaging me their analysis that happens from time to time, where they texted to me instead of messaging me on Discord. And we were just speaking about confidence and things of that nature. And I sent that individual my analysis because this morning, not necessarily was a losing trade for me, although it was not a winning trade. It was more so like a very 5 pips profit. Like, that's nothing. Okay. I just count that as a loss, more so a break-even trade. And then she asked me how I was able to interpret that the market was reversing against me. So I'm going to share with you guys that analysis today. So we're going to talk about not having an ego in the market, really understanding that we are operating in an uncertain environment, and via the CYPRX confluences and paying attention to what the market is currently telling you is much more important than paying attention to what you are feeling as an individual. And then she sent me her analysis from this morning, and for the past 3 trading days in a row, today and then Friday last week and Thursday last week, she's been on some sort of a winning streak. And although her trade went in her favor today, she said that she was still having issues with her confidence and being confident enough to enter into a trade. So I just kind of want to go into a detailistic perspective on one certain thing that I can really kind of give to you guys in the form of value to help build that confidence. Like, what is really hindering people from being confident to place a trade? Okay. So let's talk about that first. All right. Building confidence with your analysis and building confidence enough to place a trade. I think that one of the main factors that it boils down to when you're building the confidence to actually enter into a position, whether that's a buy or sell, okay, is the amount of money that you are risking, okay? Why do I say that? All right. If you are entering into a position and you've already accepted how much money you are risking, then you've already accepted how much money you could potentially lose. What does that mean? Right? We teach here at CYPRX no more than 3%. If you're trying to take a challenge, you shouldn't be maxing out more than 1% on your capital. Why? Because you're taking a challenge based off of a certain parameter of rules, and that certain parameter of rules is, a certain amount of loss per day, which I think FTMO MyFF is 5% in a day, right? So that means that if you're risking 1% per trade, and you should only be taking 1 trade per day, then you have the potential to lose 5 trades in 1 day before you max out your drawdown for the entire day. And the total amount of money that you can lose on a MyFF challenge or an FTMO challenge is, I believe for MyFF, it's 12%. For FTMO, it's 10%. That means that you can lose 12 trades back to back to back to back before you get the account taken away from you. So why am I talking about loss and managing your risk and things of that nature? And it's because mainly when you go into a trade, if you feel any sense of nervousness or you feel any sense of excitement or you feel any sense of overexposure to the market, then that is a clear denomination that you have not fully accepted your risk. And I was breaking this down to this individual that I was texting this morning, looking at it from a $100,000 account perspective. Okay. If it's Monday and you're placing a trade and you're on a $100,000 account and you're risking 1%, what does that mean? That means that if you lose this trade right now, you can only lose $1,000. That is the worst thing in the market that could happen to you. $1,000. So that alone should give you the confidence to pull the trigger based off of your technical analysis, based off of whatever it is that you're perceiving in the market. That should give you the confidence because you know that the worst case scenario is that you could lose $1,000. You know that you're not going to die. You know that your account's not going to get blown through the roof. You're going to lose all your money. You know that you're not going to lose the prop firm challenge because you already know that 5% is how much money you can lose in one single day without them taking the account from you. And you also know that based off of our technical analysis, the strategy that we teach here at CYPRX, that 9 times out of 10, if you trade the strategy properly the next day or the day after, you're most likely going to make that percent back because we teach a 1-to-3 risk reward ratio here at CYPRX, right? So those parameters should give you the confidence to place a trade. And if you don't have the confidence, then internally there's something happening inside of your psychology that you've experienced in the market that's happened to you in a past life, in the life that you're currently living, or something that you've experienced in the market that wasn't today, that's happened to you in the past. And you're placing that on your market analysis now. And so with that being said, I really want you guys to take into consideration, if you're having trouble with your confidence, you need to understand that there is no luck in this market. Zero. There's no luck in this market. Even people that win the lottery don't understand that they're not operating in a lucky environment. You have to understand that in this market, there's only a transformation of energy. You have to do something to get some sort of outcome. And whatever it is that you do, A, determines the sort of outcome that you're going to get, B. Okay? So that means how much money you're risking, how much money you're going to make, all those things you have to take into consideration. So something that I was just trying to convey to this individual about risk management and confidence in this market and how they go in tandem with each other is, if you're having trouble with confidence in this market, you need to make sure that you are not risking and exposing your capital of more than 1% of whatever given capital that is. That means $10,000. That means what? That you're not risking more than $100, right? So that means that if you're trading a $10,000 account, and I've seen this time and time again, I've seen $10,000 accounts on MyFF or FTMO, and people will send me their, they'll send me their screenshots for their MetaTrader 4, and I see 2 lots open, or I see 3 lots open. And I'm like, a 2-lot trade on GBP/JPY goes down and draw down 15 pips. You're going to lose $300-$400 right there off the bat. So when I see that, I automatically know, just because you're sending me a screenshot and that was a winning trade where you made $500, I can also see where your stop loss was. And I know for a fact that you were over leveraging on that position. So if that did go into drawdown, you would have experienced some type of nervousness. You would have experienced some type of like, oh crap, I'm in the wrong trade right now. I shouldn't be here. And if you're doing that to yourself over a long period of time, you're creating very bad habits in this market. It's something that I suffered from for a very long time, like 3 years. I suffered from this, where I thought, you know what, this is going to be the trade where it's going to go in my favor, and I'm going to risk a lot of money, and I'm going to pass my challenge in 2 trades. And this is going to be it. Okay. I have the potential to do that now because my technical analysis is so on point, where if I see something in the market, I can react to it like that. But back then it wasn't like that. Okay. So things have changed over time for me. However, I noticed that when I was really starting to become profitable is because I was minimizing my risk. Sometimes where I was like, okay, I'm really not confident here in this trade, I would only risk 0.5%. And then knowing if I'm on a $100,000 account, 0.5% is only $500, that the worst thing that could happen to me is I lose $100. When you approach the market this way, you can literally take a trade, get up from your charts and go somewhere. You don't even have to look at your trade. Okay. Why? Because you already have accepted the worst case scenario. And when you are operating in an uncertain environment and have already accepted the worst case scenario, the worst thing that could possibly happen to you, it builds a level of confidence that is unprecedented in this market. And that is what you need to succeed long-term in this market. How can you give yourself an edge in this market? Which is going to lead me into my second spiel, breaking down this trade that I closed today. Giving ourselves an edge in this market. We operate in an environment of uncertainty, and everybody has to accept that. There's no luck. Again, even people that win the lottery, they have to understand that the only reason why they won the lottery is because why? They walked into a gas station. They went up to the counter. They purchased a lottery ticket. They got that lottery ticket. They got a coin. They scratched that lottery ticket. Those are all actions in the form of energy that led them to winning the lottery. But 90% of people think that that's luck. It's not luck. They did something and they got some type of outcome. Now, yes, the outcome was them winning the lottery, but there was still some type of action that they had to commit to before they won the lottery, right? So it's the same thing with trading. You have to commit to some type of action before you win. And in our environment that we operate in, there's a certain parameter of rules that we must commit to in order to give ourselves what's called an edge in the market, which is number one, making sure that we don't risk too much money. Okay. That gives us an edge because confidence for us as traders is an edge in the market. If you're confident in your trading analysis and you're confident that the worst thing that could happen to you is you lose $1,000 or you lose $500, that's giving you an edge in the market because 90% of other traders don't operate that way. So when you can give yourself that edge in the market of confidence, you already have an advantage on everybody else in the market. Okay. So when it comes to technical analysis and ego, combining the two, okay, or talking about the two in combination, I'm going to break down via technical analysis on the charts here just in a second how I created an exit plan. But when you're in a trade, okay, don't just think because you place that trade that the market is going to respect your analysis. We've seen time and time again, GJ does what it wants to do. Sometimes it goes 100 pips bullish. Sometimes it goes 50 pips bullish and then goes 100 pips to the downside, right? What you need to understand in this market is that your analysis is temporary. You should always have what's called a temporary analysis in this market, and then you should be able to react to changing that analysis if the current market environment changes hands. So what does that involve? That involves you not having an ego. Now, in my personal experience, women in this market are a lot better at doing that than guys, because guys naturally are alpha males. We have these egos where we just always need to be right. We always need to be, the person that says what goes. We want to be in control of everything. And just in my personal experience, a lot of women that come into this market, they don't have those issues. They don't have the necessity to be right about something. They can close a trade if they're not right. It's more so guys that I see suffer from this, okay? Where once you're in a trade, you don't want to close it because you think you're going to be right. Don't ever do that, because 9 times out of 10, you're going to lose that trade, right? Your ego is going to kick in. The market's going to put you in drawdown, and you're going to say to yourself, you know what? Price is fluctuating in my stop loss right now. Okay. But guess what? I see it reversing. I think it's going to reverse. It's going to go back into my favor. And 9 times out of 10, it never does. And you lose that trade. And that one specific trade that you do that is that one specific trade that you were risking 2 to 3 to 4 to 5% because you had an ego. Okay. So don't do that. I'm going to show you guys today how me not having an ego in this market and completely approaching these markets with a logical perspective, calm, cool, collective, and understanding that I'm not above these markets. Nobody here that operates in the CYPRX space is above these markets, and that there's somebody 10 times smarter than me moving this money around, which is trillions of dollars on a day-to-day basis, that is taking the opposite position that I am taking. Every time you take a position, you have to understand that there's a trader somewhere out there with more money than you, that is 10 times smarter than you, that is taking the opposite position. And if you see the market going against you, you have to have the maturity in this market to say, okay, listen, the market is telling me right now that it does not want to do what I think it wants to do. So I'm going to close this trade. And when you do that, another way to accept that and get off of your ego, if you are experiencing that, is understanding that you can always enter in for another position. Okay. But what you can't do is you can't unlose a losing trade. Okay. So once the market goes into your stop loss, you can't undo that, right? Once the market starts taking your money, you can't undo that. It's permanent. Okay. But what isn't permanent is if you are in profit and you see the market going against you, moving your stops to break even or closing the trade. Okay. That's going to protect you from having this ego problem of saying, okay, you know what? The market's going to reverse in my favor. I'm going to be okay, is when you understand, when you truly understand that your potential in this market is limitless. That means that if you close this trade, you can enter into another trade. Now, when you decide to enter into another trade is completely up to you. But when you accept that the market is going to open again tomorrow and it's going to do the same thing that it did today on a cyclic rate, it's just going to go, it's going to go, it's going to go, with or without you, then you can come to terms with your ego and say, okay, you know what? Today's just not the day. And I would much rather close this trade at break even or a little bit in profit, right? Rather than have this trade go against me and lose. And a lot of people won't do that because they have the need to be right. They feel like today is Monday. I want to make $1,000 today. Today's the day I want to make $1,000, so I have to be right. And 9 times out of 10, when you do that, ladies and gentlemen, it's going to bite you in the butt. Be mature in this market, mature enough to really truly understand what it is that you're involving yourself in. And what you're involving yourself in is unlimited potential. And when you understand that you operate in an environment of unlimited potential, then you know that tomorrow's a brand new day. And 9 times out of 10, we're going to see the same setups tomorrow in the form of buys and sells that we saw today. And maybe tomorrow you'll be a little bit more confident, or maybe tomorrow you'll enter into a better position. Okay, so let me take you over to the charts. I just wanted to give you guys a spiel because a lot of people that are new that come into this space, they rarely see me lose trades, or they rarely see me execute an analysis that goes not in my favor. And so a lot of people think that I'm like some person that just wins trades all the time. And I've never displayed that to you guys. Like, that's who I am. I've always been very transparent with you all. And when I do lose a trade or the trade goes against me, I try to break that down for you all to show you that we're humans in this market. And sometimes our analysis is incorrect. And today, my analysis was incorrect. I was assuming that, can you guys see my screen?
Yes.
Okay.
Okay, I'm going to start from the higher time frame because that's what really was, that's really why I was attempting to sell GBP JPY. Okay, so I was attempting to sell GJ after the ideology behind us potentially clearing out liquidity above these highs here on the 4-hour chart, and maybe potentially seeing a market reversal based off of the ideology behind overbought conditions. However, obviously, of course, GJ was definitely not overbought. Okay, so now that you guys know that, we'll go into the hourly chart. So that was just my 4-hour perspective. I was like, okay, cool. London session took a little sell position. Maybe they're overbought. Maybe New York session will push up into premium, fail to break the high from London, and then sell off. I was also looking at the EMAs and thinking to myself, okay, price has expanded away from the EMAs, the 50 EMA in particular, because we're on the higher time frame. That's the one that I like to use the most. You guys know that I'm not an indicator-based trader, but when we are trending, I like to assume that the market, in order to go higher, needs to pull back to the EMA. So I was expecting that to happen during this New York session because we saw this nice sell-off on the hourly chart where we see 2 bearish candlesticks engulf the majority of price action during London session. I was looking for that pullback down into that EMA. Okay, so that's what I was expecting to happen during this New York session. Obviously, of course, that did not happen. Okay, now going into the 15-minute chart, we can see that price created a lower low, lower high formation. However, I was going against what it is that I teach you all and selling before we see a higher time frame break in structure, where now, later on in my analysis, I can clearly see that London session low and Asia session lows down here in this area were not taken out. So now in my analysis, now that I look back, I'm like, why was I even selling? I was guessing a top based off of the fractal price action that I was looking at, and I wasn't basing my trades off of higher time frame analysis, which higher time frame is bullish. Although I did say to you all when I sent the trade to you guys, I said in the trade, this is a riskier trade because it's trading against higher time frame. So what I was attempting to do was sell at a potential higher time frame reversal. Okay, which again, I told you guys was very risky. And now you can see why. Okay, this is why I teach you guys to trade in tandem with what the higher time frame is doing, because your likelihood of getting a profitable trade is so much higher. And that is our goal as traders, is to create an edge for ourselves, or to create a higher probability that a trade is going to go in our favor. So today, me taking this trade, was trading against that methodology, and you guys can clearly see how that turned out in my favor. Just to show you guys again why I teach you guys this stuff. Again, there aren't a lot of mentors out there that back up why they teach you certain things, and I will never be that type of individual. I will always put something behind why I'm teaching something to you, okay? And I'm sure that the people that have been here for, you know, more than 4 to 6 months can see that now, okay? So now you see 15-minute analysis. Let's go down to the 5-minute chart where I entered in at, okay? So over here to the left-hand side, the fractal price action that was getting me was I was looking at this potential area of interest right here, where we can see that London session put in a nice little pump into the market, and then we had a failure swing high. So once we had this failure swing high, I was looking at this as overbought conditions, okay? And then once we opened for New York session, we had another failure swing high, except we had an area of internal liquidity that I was potentially looking at. Okay, so I was looking at this as internal liquidity. I was looking at this as a potential structure break, and I was looking at this on the higher time frame to roll over to the downside. Okay, so when I entered into this position, very simply put, I took my Fibonacci from this high of London. I was looking for New York session to push into premium to take sell positions, so I extended my Fibonacci down. You guys can see that I stuck to the CYPRX confluences of only selling at a premium. You guys can see how price came into 70% discount. I sold right there. And once the market put me into profit, I created an exit plan, which is again what I teach you guys to do. Okay. Now my exit plan for this, and this is exactly, I sent this step by step to the individual that I was texting this morning. I said to them, if price cannot break this low, and I even messaged that to you guys in the group chat, if price cannot break this low, and I also had the volume profile tool on, which we like to utilize, where I tell you guys that if price is trading above this volume profile tool, most likely we're going to go in that direction. So if we take from the area of interest that I tell you guys to draw the volume profile tool onto, all the way to the open, all right, we can see that price is operating above that point of control, okay? I texted you guys in the group chat, and instead of price cannot break the manipulation window low, which were these two lows right here, that most likely we are going to see a bullish reversal, and I'm going to close this trade. All right. So I'm going to delete the Fibonacci. I'm going to delete this analysis just to clear up the charts. And I'm going to show you guys how not having an ego saved me literally 21 pip loss, because my stop loss was right above the London session highs. Okay. So let's just get rid of all this analysis real fast. I'll keep the VP O on, and we'll go down to the 3-minute chart. Okay. So once price created this lower high, lower low formation, I was like, okay, cool. Now we have a lower low, lower high, potential lower low formation, but price needs to break the overall leg that led to a bullish market reversal pattern. Where can you guys see in this leg right here, the bullish market reversal pattern that we teach here at CYPRX? Can anybody identify that for me? All right, cool. Beautiful, Danny. It's very simple, right? So with that being said, because this was the area of interest right here, okay, that led to a market break in structure, right? So we broke previous market structure. Then logically speaking, this bearish price action, if it is real bearish price action, needs to break the previous market structure higher low that continued the trend, okay? And so me not having an ego and understanding price action reality, as I like to call it, or current price action information, whatever it is that you want to call it, reacting to the market. We understand logic in this market. And when logic doesn't play out, as CYPRX traders, it allows us to step off of our ego and accept that we are not currently right and we are trading against the trend. So I pieced some things together. Number one, that I was trading against the higher time frame trend. Number two, that price is failing to break fractal structure. Number three, we have an area that the market is creating in the form of liquidity or early sellers based off of higher time frame structure, okay, above these potential highs. And we are failing to break psychological level majors, where you can clearly see every time we dip beneath the 200 psychological level, we immediately return to that and close bullish. We break bearish and immediately close back above bullish. Okay. So once we closed for the second time with this nasty bullish candlestick back above bullish, the 200 psychological level, I sent you guys a screenshot that said, this is not good. And I closed my trade. I moved my stops to break even. And I think I closed the trade right there, which is about 2 to 3 pips, maybe 5 pips in profit. Yeah, 5 pips in profit. Okay. So just showing you guys how not having an ego can save you a trade, right? But it can also save you from beating yourself up, because imagine if I had an ego, right? And I held this trade and I said to myself, you know what? No, no, no. It's going to reverse. It's going to go back and it's going to go something like that, right? Well, look what would have happened if I would have thought that way. Okay. I would have lost that trade. So just showing you guys how not having an ego helped me on this trade, how only risking 1% on this trade helped me in my confidence to take this trade, because I was trading against the higher time frame, right? I knew that it was a more risky trade, so I was only risking 1%. So the worst thing that could have happened to me if I did hold this trade was I would have lost 1%. Okay? Just showing you guys how it's not always technical analysis. The only reason why I won this trade, now I don't like to call it a win, but it is a win at the end of the day. Let's just say the only reason I didn't lose this trade was because of my psychology. It had very little to do with my technical analysis. Yes, I get it. Okay, we were looking at a potential sell in a premium range, right? And that's how I was able to catch maybe, what is this, like 20 pips? 20 pips, okay? But overall, the only reason why I didn't lose this trade was all psychological. It was all psychological, okay? Which is why I try to teach you guys that psychology is 80% of the battle when you're trading. It is 80% of the battle. Most people, even when they hear that, will still think that it's technical analysis that makes you a profitable trader. It is not technical analysis. Technical analysis is the easiest thing in the market to come by once you have a strategy that works. And here at CYPRX, you guys are in good hands. You already know time and time again that the strategy that we teach here plays out if you're patient and you can wait for it. The only major thing for you to do left is for you to control your psychology. And that's something that not myself, not Ezra, not any other mentor that comes into this space, maybe Danny one day, right? Who knows, is going to be able to help you with, because that's what you have to control up here. Technical analysis, we can pick and choose what it is that you see in the market by teaching you something time and time again, 10,000 times over and over and over, showing you a pattern that repeats itself. But for you to gain the confidence to react to that pattern is all psychological. It's all psychological. All right. So very simplistic breakdown. I'll end it right there for the YouTube channel. I'm going to stop recording and then I'll leave.